Let's look at this
Can you hear me?
report suggesting the quarters of Nigeria, Kenya, South Africa, are becoming the hotspots for investors in Africa. I would like to know from your own experience and from your own dealings as an investor and as a global affairs analyst, why do you think these countries, they are of interest to international investors, and what do they have in common?
Right. Well, first, the first part of your question is very interesting. What do they see? They see a gap. Any investor going into any country, they see a gap. And normally, the countries themselves perhaps miss that gap. They look at, one, your population. If you look at Nigeria and all the four countries that you spoke about, they all four have a very large population. If you look at Africa, as a rule, you have, very young population as well, vibrant, digitally savvy. And secondly, when you look at what are the countries they're heading for, those are the countries that have resources, quite a number of resources. South Africa, what are we looking at? We're looking at mining. We're looking at gold, diamond. Those are very strong reasons to go to South Africa and invest. When you look at Nigeria, you're looking at 36 countries in effect. Our 36 states in Nigeria, on average, most of the GDPs of each of those states are higher than most countries in Africa as a whole. So therefore, they're looking at 36 markets in Nigeria, each state having their own resources, apart from our main process, which is oil, but we have gas in trillions of cubic meters. We have all the raw materials that you find elsewhere. We also have gold, we also have diamond, we also have lithium, all the precious rare resources and raw materials. Kenya, a huge agricultural basket. Tea, they also have oil and gas, but a minimum. But you're also looking at the near markets. So when they look at those, and Egypt, when you look at those four cardinal points in Africa, you're looking at, one, the captive market, which is Nigeria. So before they even leave the country, they can start making money in the captive markets of Kenya, South Africa, Nigeria, and Egypt. Then you look at the near markets. Those are the things people are not looking at. What are the near markets? Your near markets are all of West Africa using Nigeria as a base. Look at the near market for Kenya, the whole of East Africa, Uganda, Tanzania, Rwanda, Congo. They are huge near markets. You look at South Africa, Botswana, Zimbabwe, Lesotho, they are near markets. Look at Egypt. They're also looking at near markets in North Africa, plus the captive market. So when you look at what are they seeing? They are seeing markets and they are seeing resources. And that is probably what we as Africans keep missing. We keep missing the fact that we have the market, we have the population, we have the resources. Everyone should get involved in one way or the other, starting a small business and expanding. And the governments now should fast track and incubate businesses to take advantage of those gaps in the market that investors from outside are seeing. They're not coming to make your life happy. They're coming to make money, double, triple, and quadruple their investments. Is it the raw materials that they are going to take away and process and sell back? Or is it, services that they see a gap in? For example, Jumaya, you talk about, Uber and all these other services. What did they see? And where are they making most of their money? As you know, the airlines, for example, make a hell of a profit out of Nigeria alone. At one time, British Airways, 20 to 30% of their profit came from Nigeria alone. High value in seats. So it's the market. It's the market and the gap in the market that they are all seeing.
All right, Ambassador Wallace, it's good to see you in 2024. Happy New Year.
Thank you. Happy New Year to you too.
Thank you. All right, talking about filling the gap. Now, the report also has it that fintech is reeling in substantial investment, taking about 23% of the investment. Now, what should that mean for the financial sector in Africa?
Right. I'm also an innovator in fintech. I'm talking about a standard United Digital African Currency contract. Fintech is going to explode on the continent. We have so much innovation with our young digital savvy youths that right now, I think most of our countries, especially the 4 cardinal countries that are noted, should invest heavily in fintech, because fintech is the bloodline for transactions. And most people are now looking at alternative and innovative ways of using finance and using digital innovation in fintech. Yes, fintech now is going to drive a lot of our transactions, a lot of our businesses, and a lot of our young, youthful, digitally savvy young men and women on the continent. So I think from an overview point of view, Nigeria should, as our country, the rest of Africa should, look at investing, putting a lot of local content into developing our industries in fintech, because that will drive quite a lot of what we know as the accelerator for growth.
According to the report, other sectors being spotlighted include, agric, health, and education. Talk to us, what are some of the gaps these investors must have spotted in these sectors that, is making them to deem it fit to invest in these sectors? Some of these sectors, you have agric, health, and education has been of interest to these investors. What are the gaps in these sectors?
Right. So if you look at agriculture, for example, we have large swaths of very fertile land all over Africa. Is it the Congo? Is it Kenya? Is it Nigeria? So many states that we have good, fertile agricultural land. But what we are probably not having is investment internally from governments to set up, for example, why don't we set up, among youths, farmlands, provide a home and a 1 or 2 acres, give them a particular crop to develop, and let those crops be in a cooperative. Let's say the government has a cooperative in each state or in each community. You bring your produce and you sell the government. Government can now aggregate that throughout the country and then export the rest. They should play a role as a driver, So they're seeing that, look, you have fertile land, you have swaths of land that are underdeveloped and underfound. So they'll come in and use mechanized production to take advantage of the swaths of land that you have. And for example, if you look at some of the foreigners, whether it's Chinese or they're just buying up the land, developing it, and exporting from our own countries the produce for their own people. They saw that gap. But we now should block those gaps. We now should create farmlands and do what I call farming for the youth, let them know that it's attractive, let them know that they are guaranteed, for example, that they can have their produce bought immediately from government. I mean, they do it in the United States, don't they? They go to all the farms and they give them grants and they make sure that their produce is always bought, even if they don't sell it, but they guarantee that they buy it from you. And therefore, you are investing in your own people and the land. Okay, from agriculture, we go to health. The health sector in many of our countries are, not properly looked after. We shouldn't have to be going to the UK or the United States. Let's invest in our doctors. Let's invest in our own pharmaceutical companies. because we have the market, we have the population. So if you look at health and then you look at education, in some countries, for example, in the Caribbean, education is free. You know, you look at India, what has India did with Mumbai? They hot house a lot of their talent into IT, which is now outsourced to the world. Most countries, is it Google? Is it Microsoft? Most are led by Indians who were hot housed in India, who targeted and made sure that they invested in their people. And we have to do the same. It's knowledge-based economies. We should now do the same. Why shouldn't the education, for example, be free? You have enough funds, enough resources to provide education right up to university level and hothouse all of our knowledge-based individual in the country. Those are the gaps that they are seeing. So they will come and they will sell you, education abroad. They will come and invest in private schools. We should be doing that. We should be investing in education, making sure that we can benefit from the knowledge chain that we have among our people. Again, it's gaps. It's gaps. They're all gaps that they're seeing, and we're not seeing it. We need to plug those gaps and make it benefit us. And that is where one of the things I drive, I'm passionate about local content development. Local content development and human capital development. Those are two things that we must concentrate on as Africans.
All right. If you look broadly into the investment landscape, you find a diversification as investors are being attracted to new geographies such as Rwanda, Tunisia. These countries are referred to as emerging markets. Now, what do you think primarily is the attraction in those regions? You just talked about Africa building on content and human capital, but what else? How can these countries position well and take advantage of the investment funding that they're receiving now from investors?
Right. You've talked about a very correct issue here, because you mentioned Rwanda. Why are they finding Rwanda attractive? Ease of doing business. You can go to Rwanda even online and set up a company within 24 to 48 hours without having to pay any extra monies to individuals or gatekeepers. You can start your company and you have the ability to position yourself and your company immediately to start trading in the areas that you feel comfortable. So it also has to do with governance. It also has to do with ease of doing business. It also has to do with how can we, make it attractive for investors to come and partner. And I think we should take a page out from, for example, Dubai. Partner with locals, or we should have a rule that if you're coming to invest, let us also have, a partnership with you. Make sure that individual nationals are participating with you. So we have knowledge transfer, we have the investment that are shared. We don't mind you taking, your profits away. That is also something that they are always looking at, the ease of doing business and the ease of recouping their investment and their profitability. But I also say that we should also ensure that we share in that wealth, because they're coming to take our resources, our products, our human capital. Let's participate and share in that venture and make it a rule that we are, and if you're coming to invest and we provide ease of doing business, then also make sure that you give something back to the country by participation of locals.
All right, looking at the African continent and some of the countries, in this continent, when it comes to natural resources, we are blessed. But people come up with this narrative. Why is it that Africa is not living up to expectation when it comes to maximizing its resources? In spite of the level of this investment, you still see, a low rate of economic growth and development. What are the missing links?
Yeah, because what is missing there is that the investment is lopsided. And again, this is where I keep, fanning the flames of local content. You cannot come to a country and invest, and there's no participation of the communities and or the population. What do investors do? They come in, they maximize their investment alone, and only perhaps with some individuals in government. So participation and local content is avoided because just a few will make that money. If we don't provide those funds ourselves and invest in the local content, then we cannot grow. And therefore, the question about whether or not, we have all the resources, we have to have the equipment, we have to have the training, we have to have the skill, and we too have to have the investment. And this is where we talk about why do we go into these big major, what I will call irrelevant projects. Why are you building 10 stadiums? Why are we not investing in education? Why are we not investing in health? Why are we not investing in SMEs? Why are we not investing in skills transfer? Why are we not investing in the equipment required for those resources? Why are we not, for example, in education teaching mining, right? If we have so much resources, we should have a school of mining, for example, and be putting through graduates with also an addition to their mining degree and education, business orientation, how to start a mining business, how to get the capital, let the government also provide the capital to buy the equipment after you have been taught mining. So we have to invest in human capital development, local content, equipment, training, and also skills transfer. Those are the key things for growth. How can we grow and we have the resources and just say, okay, Mr. Foreigner, come with your investment, come with your capital, and you make as much as you want, as much as you can, and we are left out of that framework. If we are left out of that framework, you can't grow. You just can't grow because all you're doing is providing to the foreigner a white paper. Do what you want, do what you can, just pay a few of us and carry on. No, it has to stop. We have to now imbibe and invest in our local content and human capital development. And do, for example, in Trinidad has the University of Trinidad and Tobago. And what do? All the courses are geared towards the sector of oil and gas, which is the natural resource of Trinidad. What do they have? They have a National Energy Skills Center. All the skills required to plug the gaps in that sector so that foreigners don't come and have those jobs. They make sure that they train their local. And that's why local content from Trinidad and Tobago, which I brought to Nigeria, and we were happily now, you have National Content Monitoring Development Board, is trying to drive that process. But we need more of that in other areas, not just in oil and gas. We need it in mining. We need it in agriculture. We need it in education. We need to now set up, schools of local content thought to drive the areas that we want developed and make sure that the strategy of the government, the high-level strategy matches with the investors. You're coming in, you are going to train, you are going to provide skills transfer, you are going to participate the local community and local content. We have to keep driving local content to develop. If we have to develop and take advantage of those resources that you now talk about, and while we are not developing, those are the missing gaps for us. Local content development in each sector and human capital development, plus investment and strategic level planning by all governments. And it must be a must. Education, as I just said, you need to provide it and make sure it's free of charge. And there's no country that has so much wealth like Nigeria and others that cannot say, let us provide education free of charge for our population. Why not? Why are you going to go after what we call white elephants that take billions of dollars instead of investing it in local content and human capital development? I can't continue to talk enough about this because I'm passionate about this, because this is what I see is missing. This is a gap. This is the gap that is missing. We need to develop local content. We need to develop human capital development. Absolutely.
The attraction primarily for Rwanda is ease of doing business, and every investor wants to go to a place where they find business easy or they can do business easily. So what are the conditions necessary for ease of doing business?
Ease of doing business, you can incorporate your company quickly. You know exactly what your costs are in terms of taxes. You know exactly what the limits are. For example, if you're going to get a tax holiday for investing, nobody is going to bother you with your profits. No one is going to tell you that you have to pay extra costs for things that, what we call hidden costs, and it just appears all of a sudden. And, it comes as a surprise. So ease of doing business is you must be able to come in, set up your company in quick time, bring your investment, open your bank accounts easily. Those are ease of doing business. That the government gives you tax breaks. They gives you a population that is literate, that is skilled. Those are the things that are ease of doing business. So people feel comfortable that when they come to your country, they know that they have a source of skilled workers. They know that they have ease of doing business in opening their accounts, incorporating their companies, and that, you will not be harassing them whilst they're operating. So once they know that, and the environment is safe, that's the other thing, that the environment is safe, so security. And if you've got those things and the infrastructure is there, if they have to move goods, then they feel comfortable. They feel very comfortable to come and do business in the country.
Interesting. I'd like to know, how would you assess the business environment and the cost of doing businesses in these countries that are of interest? And how will this pose any challenge, to any investor who is coming to these countries for investment?
Right. Well, one of the key things you have to look at power and the source of power. Nigeria, we have epileptic power here, for example, and people will find that they have to put a high premium on energy and power supply for running their businesses. And that sometimes could be, off-putting to the ease of doing business. In the other areas, they know that they have constant power supply. They know that their transportation system and road infrastructure is good. And those are issues that we have to address. So in Nigeria, one of the things that I think is absolutely needed for accelerate growth in Nigerian businesses and ease of doing business is fixing the power supply. Fixing the power supply must be priority number one in terms of attracting investment. Rwanda, constant supply. Kenya, constant supply. Egypt, I believe, also constant supply. Although South Africa is having now load shedding, but they already had before constant power supply. Now, those are, I think, one of the key factors in ensuring that you have also the ability to bring investors who feel comfortable that, when they come with their funds and their equipment, that, they will be able to operate with enough power supply. And that's one of the key things that I see that's missing.
All right, so for African countries that perhaps not named yet as investment destinations but would want to make the list, what are those things they need to do to make their country more attractive?
Right. First and foremost, as we said, let's get ease of doing business. How easy it is to incorporate, open a bank account, move your funds, and make sure that your funds can be repatriated when you have profit. Secondly, make sure that there is power and constant power supply. Thirdly, ensure that you have skilled, very skilled population. So that means accelerating your skill base in the country. And 4, your infrastructure. Those are, I think, for any investor, even myself, if I'm investing, those are very key. And then, what breaks are the government going to give you to bring your funds in and your skill and transfer your skill? So, are you going to give us a 5-year moratorium, a 10-year moratorium on tax? What are the advantages and holidays you're going to give to my investment? Because people want to know that when they bring the investment, they're not going to be taxed to the hilt in the first few years, because they have to, they have to operate, they have to build the business, they have to build the company before they start making profit, depending on what kind of business they have. So they have to ensure that they make their country very attractive by highlighting those points. And, what investors do is the tick-off. The tick-off. Do they have good skilled workers? Yes. Is it easy to incorporate? Yes. The ease of doing business and account opening? Yes. Can I repatriate my funds? Yes. Can I have good infrastructure network? Yes. Power supply? Yes. So once they have just those very important points in a template, you'll find that they can reach to that level as well. And then they have to ensure that they make it easy for an investor to walk in, and he can have, those things that he feels comfortable with where he was before. And most of them, of course, are coming from Europe, where basically most things work. Their rail network, their transportation system, their power supply, their banking sector, the incorporation of companies, and they know that if they are coming, they must be accustomed to something very similar, very, very similar.
From experience, I would like you to talk to us. What are some of the common mistakes being made by foreign investors when they come to the African climate for investment? Maybe other investors who are coming on board could also take some lessons from these examples. What are some of these common mistakes that they often make?
Well, some of the common mistakes, they still think Africa is, backward. They come with an attitude that they can lord it over the continent. And that is one of the missteps that many of them make. And they do not, have the community participating. They just deal most times and most levels with just the top echelons of government, and they don't dig deep into the culture of the country, into the mindset of the country, into the way of life of Africans. They see us, as most do, almost 70 to 80% of them, with the exception of a few who do, corporate social responsibility. They just are there to make the money, and we are their servants. So there's still the mindset of, Africans are slavish, they're there to serve, and, long may that continue. So the modern Africa, which is growing and evolving, and I'm thinking that the youths will no longer be like their parents and grandparents. You have to now meet us on equal terms. And they have to come with respect. They have to come and respect Africans now as equal partners. No longer is it serfdom. No longer the mindset of, the older folks who were not very educated in the sense that they did not go to school, though they may have education of the environment and, of things that they did with farming and tilling the soil, etc., which was the mainstay of most Africans, and that was the attitude, the British, the French, etc., just saw us as there to serve them. Now we have a huge youth population who I think, and I can see it happening, are not ready to take that nonsense because they are now educated from the point of view of, having university and other education and skills and fintech skills which is, one of the emerging markets. And when you come to Africa now, you should be thinking, not to make the mistake to think that it is the way you read in the history books, that Africans, backward. No, it's not anymore. And that's why I keep saying we need to now push some more and accelerate more of our education and local content aspect. So they have to come now with the attitude, let us be partners in growth. Let us be partners in wealth creation. Let us be partners in progress. Let us be partners in participating in the world economy. So come with that mindset that Africa is now growing. Africa needs partners and investors who see the continent as a participating continent. Change the mindset. It's no longer serfdom. So the mistake they make is going back to the old historical training and books that they've read and stories that they've heard, because a lot of them coming for the first time come with an attitude that you're there to serve me, and to hell with anything else, just do as I say. I'm going to lord it over you. I'm Lord and Master. No, they've got to change that mindset. So they need to come with empathy. They need to come with participation, mental attitude. They need to come with understanding our culture, things that we don't adhere to, and respect it. They need to come and respect us as individuals and respect, our way of life and our way of, evolving our culture and our mindset, and grow with us. So come with that open mind and do not think that you're coming to exploit, because the days of exploitation is fast becoming a thing of the past. As you can see in West Africa, the bold moves that the youthful people from Burkina Faso and Mali and Niger are making. They're saying enough is enough. We've had enough of that yoke of colonialism, imperialism, and neo-colonialism, and we now want to be recognized as equal partners. What did they do, for example? They said, okay, you were taking our lithium, giving us cents, and selling it for thousands of dollars. Pay the thousands of dollars here now. You were taking our gold and paying us, pocket money. Now pay the price on the world market. So they're woken up, and most of the youth of the continent are waking up and watching and seeing what the others are doing. And they are going to do the same. So come with the mindset, don't think you're coming to cheat us anymore. Don't think you're coming to exploit us to the fullest anymore. Think of yourself as coming to make money and create wealth together, participating. So they've got to change the mindset of master-servant. We are no longer your servants. We are equal partners.